Somewhere in a recycling bin in Ohio, there's a receipt. It's from spring of 2025. A blender, a phone case, some socks. Total, $61 and change. Nothing on that receipt says tariff. No line item, no asterisk, no small print. But somewhere inside that $61 is about $1 that didn't used to be there. That dollar traveled. It left a wallet, went into a register, moved up a supply chain, crossed a customs desk, landed in the United States Treasury, and got spent. Then, in February of this year, the Supreme Court ruled that the government never had the legal authority to take it. So the dollar came back. This is the story of where it went. First, the size of the thing. According to Customs and Border Protection's own filings in federal court, importers paid roughly $166 billion in tariffs under the International Emergency Economic Powers Act. That's across about 53 million individual shipments, involving around 330,000 importers. 6-3, the Supreme Court said no. The 1977 Emergency Powers Law does not let a president set tariff rates for the whole planet. Whatever those payments were, they weren't legal. Now here's the mechanical question that turns out to be the entire story. When the government has to give back $166 billion, who does it give it back to? Legally, the answer is clean. You refund the party who paid. Economically, the answer is a mess, because the party who paid and the party who bore the cost are not the same party, and the paperwork only knows about one of them. Let's be precise about who bore it, because this was argued about for 2 years, and it isn't really argued about anymore. The promise was straightforward. On the campaign trail in September 2024, Trump told a crowd that tariffs would not be a cost to Americans. It would be a cost to another country. Researchers went and measured. The Federal Reserve Bank of New York found that U.S. firms and consumers absorbed close to 90% of the burden through late 2025. A separate Fed study found something even more specific. Pass-through is essentially dollar for dollar about 7 months out. If a retailer's cost to acquire something goes up $1 because of a tariff, the shelf price goes up $1. It just takes 2.5 quarters to get there, which is exactly long enough for nobody to connect the two events. The Tax Foundation put the 2025 hit at roughly $1,000 per household. So picture the flow. Cat hands over $1 at the register. The dollar goes to the store. The store already handed it to the importer, who already handed it to Customs, who handed it to the Treasury. 4 hops. Cat is at the far end of the chain and never sees any of it, which is the whole design. A tariff is a sales tax that arrives disguised as a price. February 20th, 2026. The ruling lands, the money has to go back, and the dollar starts walking backward up the chain. Treasury to Customs. Customs to the importer of record. Then it stops. The importer of record is where the refund ends, because that is the name typed into the customs entry form, not the person who paid. The name on the form. Think about a group house where one roommate's name is on the utility account. Everybody chips in every month. Then the utility discovers it overcharged the account for a year and mails one check. The check has one name on it. Nothing in that process asks who actually contributed. The paperwork isn't lying. It's just answering a different question than the one that matters. Andy Lynn runs a gift shop in Detroit. He told the Detroit News that the 2025 tariffs cost his store about $10,000. He does not expect to see any of it because his name isn't the one on the entry paperwork. His freight forwarder's is. His words, they paid the tariffs. Someone else filed the form. There are a lot of Andy Lynns. Customs identified around 330,000 eligible importers. In a court filing dated March 30th, fewer than 27,000 had signed up for the refund portal. The rest either didn't know, didn't qualify, or couldn't produce the documentation. Meanwhile, the checks that did clear were enormous. Walmart reported a $2.9 billion refund, the largest disclosed by any American company. Target, $994 million. Home Depot, $730 million. Apple, roughly $2.2 billion. Ford, $1.3 billion. Amazon booked $600 million in a single quarter. Look at Walmart's numbers from last Thursday for a second, because they're strange. Net income for the quarter ending July 31st, $6.4 billion. Roughly $2.9 billion of that, nearly half, was the government returning money it shouldn't have taken. That's not a product. Nobody sold anything to earn it. It's a legal event that showed up on an income statement. And U.S. store sales, excluding fuel, grew 2.6%, slowest in about 6 years. So Walmart beat expectations on profit, and the stock fell 9% in a day. Investors looked at the biggest single line in the quarter, recognized that it happens exactly once, and priced it accordingly. A refund is not a business. You can't do it again next quarter. Cat, holding a chart, watching a company make more money and lose value at the same time. To Walmart's credit, and this deserves saying plainly, they said the money is going back into prices. The CFO, John David Rainey, said they'd received substantially all of the $2.9 billion and were directing it into grocery and general merchandise. The company reported more than 11,000 temporary price cuts in the quarter, up from about 7,200 the quarter before. Target said it lowered prices on more than 10,000 items over the past year. That is real. If you buy groceries at Walmart, you are getting some fraction of that money back in a diffuse, unlabeled way. But notice the shape of it. Nobody is being repaid. There's no ledger, no calculation of what any specific household overpaid. The money is being reinvested into competing for future business, which is a corporate strategy and a defensible one, and also not the same thing as a refund. Senator Elizabeth Warren has been writing letters to these companies asking a simple question. How much did you collect, and how much are you giving back to customers? Her office's position is that consumers, who bore nearly the full cost, have received nothing. Companies have largely not answered with numbers, and the economists were skeptical from the first week. Goldman Sachs put it about as directly as a bank puts anything. They would not expect companies to lower prices in response to tariff reductions anywhere near as fast as they raised them, in response to tariff increases. Mary Lovely at the Peterson Institute described the mechanism as sticky prices, the observation that price tags go up like an elevator and come down like a feather, and that a company that discovered customers would tolerate a higher number has learned something it is not eager to unlearn. There's one clean exception: UPS, FedEx, and DHL, each committed to returning refunds to the customers who were originally charged import fees on individual packages and set up portals to do it. If you ordered something from overseas in 2025 and got hit with a delivery company customs bill, that money has an actual path home. Go look. That covers a sliver of $166 billion. It's the only sliver with a name and address attached. Now the part that reads like satire and isn't. Long before the refunds started flowing, a market appeared for them. Hedge funds and distressed debt shops began buying importers' refund claims. The pitch: you might wait years and litigate for your money, or we'll hand you cash today, and we keep the full amount whenever it eventually arrives. Before the Supreme Court ruled, brokers described bids around 20 cents on the dollar. After the ruling, NPR reported the trades running closer to 45 cents on average. One concrete example: Kids 2, a baby products company in Atlanta, sold claims on roughly $15 million in tariffs it had paid for about $2 million. That's a company that paid an illegal tax, needed cash to survive the illegal tax, and sold its right to recover the illegal tax for about 13 cents on the dollar. The remaining 87 cents went to whoever had the balance sheet to wait. Congressman Jamie Raskin sent a letter in late February requesting an investigation into Cantor Fitzgerald's activity in this market, given that the firm's former chairman is now the Commerce Secretary. That is an allegation and a request for scrutiny. It is not a finding, and nothing has been established. What's simply documented is the shape of the trade. The deeper your pockets, the more of the refund you keep. Which leaves one question that almost nobody asked out loud. Where did the refund money come from? The tariffs were collected last year and spent last year. There is no jar. The Treasury doesn't hold your tariff payment in escrow pending judicial review. So when Customs sends $49 billion out the door, it comes from the same place every other federal dollar comes from: current revenue or borrowing. In June, the government paid out $49.1 billion in tariff refunds and collected $23.6 billion in tariff revenue. Net outflow: about $25 billion in 1 month. Treasury data released July 13th showed the federal deficit widening for the first time that fiscal year, in the 9-month gap hitting $1.37 trillion. July was the same story. Roughly $33 billion refunded against $25 billion collected. The Congressional Budget Office now projects a $2.1 trillion deficit for fiscal 2026, about $200 billion worse than it estimated in February, with customs collections running roughly 60% below what it had penciled in. And last week, the national debt crossed $40 trillion. The refunds are not the cause of a $40 trillion debt. They're a rounding error against it. But they're a rounding error with an unusually clear structure, so follow it one more step. CAT pays $1 in higher prices in 2025. The government spends it. A court rules the dollar was never the government's to take. The government sends $1 back, one it no longer has, so it borrows it. The borrowed dollar goes to a corporation. CAT, as a taxpayer, now owes the principal and the interest on the dollar that was taken from CAT in the first place. CAT holding a receipt. CAT holding a second receipt for the refund of the first receipt. CAT holding a bill for the refund. And the last thing, the tariff itself never stopped. Within hours of the February ruling, the White House invoked Section 122 of the Trade Act of 1974, a different authority, one that permits a temporary surcharge for a maximum of 150 days. 10% at first, raised to 15 2 days later. Analysts at Global Trade Alert calculated that the trade-weighted average U.S. tariff rate under that surcharge came to about 13%, versus roughly 15% before the ruling, and about 8% if nothing had replaced it. Then the 150 days ran out. On July 24th, the Trade Representative's Office replaced it with tariffs of 10 to 12.5% under Section 301 on 60 economies covering roughly 99% of U.S. imports, on the grounds of forced labor enforcement failures. Steel, aluminum, copper, and auto tariffs under Section 232 were never touched by the ruling and remain. In August, a separate 50% duty on a long list of Canadian goods took effect under Section 338, a provision of a 1930 Tariff Act that had gone essentially unused for 90 years, so the legal foundation was demolished and rebuilt 3 times in 6 months, and the number at the register barely moved. Which is the actual ending here, and it's a quiet one. The court decided a question about presidential authority under a 1977 statute. It did not decide who ends up paying for things. That was never the question in front of it. The $166 billion is real, and it is moving, and the paperwork is scrupulously correct at every step. The importer of record gets the refund because the importer of record paid the tariff. That's true. It's just not the same as accurate. The dollar from that receipt in Ohio has now completed a full round trip. Register, warehouse, customs desk, Treasury, bond market, and back out to a corporate bank account, where some of it is going into cheaper ground beef, some of it went to a hedge fund at 45 cents, and some of it is just sitting there. CAT is at the register again. Different day, different tariff, same shelf price. The blender still works at least, and maybe that's the point. When billions of dollars move through a system this complicated, the paperwork can be perfectly correct, while the outcome still feels completely backwards. You paid more, someone else got the refund, and somehow, that's exactly how the system was designed to work.